Okay, hi everyone, Daryl here. Yeah, so I'm at home, and every now and then, right, I actually get like quite random questions. I think that some people they are just curious about why certain things are happening in the market, and then they they do write like emails to me. It's like quite interesting. I actually got like uh, some kids who are studying in the junior college which I graduated from. They actually wrote to me some economics questions. It's quite interesting. So yeah, one of the questions that I got, I don't know who, I don't know, I mean, I don't know the profile of the person, but I know the person. That means that the person wrote to me via email. So this person actually asked, if the economy is doing so badly, then why is the stock market rallying? Okay, so for starters, right, the stock market is not exactly rallying. Okay, just just for uh, just to set the record straight, I actually uh, clarified with this person, and this person was actually looking at the U.S. stock market. So what happened in the U.S. stock market was that it actually hit a peak of about, I think about Dow Jones hit a peak of about 28,000 ish, around there. Then what happened was that there was a huge decline with the due to the outbreak of the COVID-19 coronavirus. Then it plunged all the way to about 18,000 something. So it was like a 30% plunge in record time. But since then, and in around the turn of like around Easter, then the Dow Jones Industrial Average started to pick up and recover. So now I think it is about 24,000. Okay, so then this person is asking, so if the economy is doing so badly, right, then how come there's this stock market that's rallying? Okay, so one of the reasons is that there are a few reasons. So one of the reasons is that uh, this can be this can be like what we call like a fake rally, which means that there are a lot of people who, if you go outside and then you speak to a lot of investors, they will tell you, say, oh, I'm always waiting for the bottom, so I always want to buy when the prices are at the absolute low. But nobody, right, who even the shrewdest investor who has been looking at the stock market for decades can predict exactly when a certain stock price will be at its absolute low. So what happens is that there are a lot of people who, for some reason or another, uh, they they may say that, oh, I want to wait. So every day they look at the stock market, then they see, oh, the thing go down lower, 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 because of the pace of the decline, right? So they think, oh, 30%, it may go even lower, it may go even lower. But the truth of the matter is that at 18,000, there was a 18,000 plus, there was a bounce. So there's a bounce to 19,000 plus. Then they say, okay, maybe it's one day only. Then there was a bounce the next day. Then the bounce the third day. So what happens is that these people have this impression that they are missing out on something. So what they'll do is that they will say, okay, I think the worst has already happened, and then like Donald Trump says that everything's going to be fine. Then they just jump in. So because of the fear of missing out, these people actually jump in. Then it creates a situation whereby more and more buyers are trying to get in because they don't want to miss out on the market rally, the rebound. So no market goes to zero. So when the market goes down, there's only two things that will happen. One is that it goes down all the way to zero, which has never happened before. So number two, right, is that it goes up, which means that things only go down or go up, right? So like I've always been mentioning, property prices cannot keep going up in a straight line trajectory. It can also go down. So then the the stock market, when it goes down, the only other direction it can go is to go up. If it keeps going down, it will go down to zero. Okay, so the Dow Jones Industrial Average has never gotten down to zero before. Okay, so what happens is that people who have this fear of missing out, they will jump in because they see, oh, things are starting to get better, not in the medical front, not in real life, but in the stock market. So then, because the things are getting better in the stock market, they say, okay, I better jump in. So jump in, buy, 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 buy. It can be that the worst has already passed, if that is really what is happening. But then, uh, that it can be such that this is just a minor rally. So I would always caution people, if you look back at the Great Depression, you look back at the Great Recession. So the Great Depression was about a century ago. So the Great Recession was the financial crisis. Then you take a look, right? There were instances whereby markets dropped, then dropped significantly, then there was a significant rally, then it dropped further. So this is something to take note. There are a lot of people who coin this term called dead cat bounce, which means that you drop the cat on the ground, right? Then because of some, I think it's some nerve reaction or something, right? The cat will actually jump up when it dies. So but eventually the cat is actually dead, which means that the gravity will just pull the cat down to the ground again, which is exactly how the stock market reacts to, or how the stock market behaves. Sorry. So that's one. The first reason why the stock market is rallying is because there was a minor rebound. Then people who have this fear of missing out, they actually entered into the market. Okay, so the second reason is that there are people who so when the stock market goes up and the stock market go down, right? You can make money also. If the stock market go down, you can short the market, which means that you sort of place a bet. It's essentially placing a bet that the stock will go lower. Okay, so what you do is that you essentially sell the stock first. So if let's say the stock is, let's say, $20, you essentially sell the stock. You don't have the stock, but you sell the stock. You sort of like, you let's say I have this share. Okay, so these shares I lend it to you. You have to return me maybe, okay, we just take it hypothetically, you have to return me in 2 weeks. So today you sell it for $20, but you assume that 2 weeks time, right, it will drop down to $15. So what you do is that you just buy back 2 weeks later at $15 and return to me. You make the $5, okay, because you already sold at $20. So in Singapore, we can't do like what we call naked short. We can do contracts for difference. So you can see CFDs, right? You can go to the different brokers, then you can do CFD. So if you think your market is going down, so what happens is that if let's say I'm betting that the market goes down, okay, then but what happens is that let's say I bet that the market will go down, but instead of the market going down, right, the market goes up. So what do? I'm in a position whereby I need to return the stock to Daryl, right? I need to return the shares to Daryl. So what I do? So I quickly cover my position. What I do is that I quickly go out to the market and then just buy something. Buy enough to return Daryl at that. Like if I borrowed 100 shares from him, then I must buy 100 shares from the market and then return it to him. So if I borrowed it when it was $20 and then it went to 22, and then what it seems like it's accelerating, right? Okay, never mind. I go just go and cover my short, which means that I quickly go to the market and pull out $22 and then I put it there. $2 I lose, never mind. I lost money in the stock market. So the second reason is that people are actually covering their shorts. Okay, then when there are people who are really in deep short positions, so they will cover even more. But I think the third reason is the main reason why the stock market seems to be at a level which doesn't quite um, reflect what the US is going through in terms of uh, the pandemic. Okay, so in the US, right, every day you see record numbers of cases and deaths. So if I'm not wrong, today we see today is currently is the 19th, well, it's midnight, so it's 20th of April, and I think US is close to about 3,000 deaths nationwide. So the pandemic level, right, they're not doing too good. But what happens is that there's a lot of stimulus. So the government actually went in, and then the US Federal Reserve actually said that it's a lender of last resort. It will buy up every single bond that is out there in the market. So it tames the financial markets. Essentially, what happens is that the US uh, central bank is printing money, which means that it's flooding the economy with money. The government is also giving it this thing called helicopter money, which means that it's giving 1,200 US dollars to every citizen to try to ask them to go out and spend. So if all these people are receiving money, the dollar value of that, the intrinsic value of that dollar is lower already because there's so much supply. Okay, and at the end of the day, if you take a look at a company like, let's say, Apple Incorporated, in December it was at, I think it's about 240 US dollars per share, and now currently it is still around that level. Okay, so what's the difference? Back in December, Apple was a really fine company. I mean, it's still a fine company now. It was sitting on huge cash reserves. The economy was doing fine. It's gaining foothold in the Chinese market. It's expanding. Its iPhone sales were doing well. So now currently, if even if you go to like the Apple store in Singapore, it's not open. Okay, and then but yet, Apple they close off their stores all over. So that means that if you want to buy something from Apple, it has to be online order, then they will deliver it to you. So even recently they released the iPhone SE, and then there was no fanfare, which means that there was no launch event, there was nothing. It was just announced, put on their website. Okay, and then they have a lot of component issues. They cannot get their parts from China and whatnot. So Apple is supposedly in a poorer condition today in April as it was in December 2019, which is 4 months ago. So we expect them to not hit their estimates, their guidance, their earnings guidance. We don't expect them to do well in terms of sales figures as compared to maybe 1 year ago. Okay, but yet the stock price is about the same in April 2020 as compared to uh, December 2019. Okay, one thing is that when there's so much money moving around in the economy, if you think about it, the government is giving money directly to citizens. Same thing that's happening here in Singapore. Even if you give me $600, I also cannot go out and spend. So essentially, even if I want to go and not celebrate lah, okay, I wouldn't celebrate just getting $600 and then everyone is actually ill. I mean, there's a huge pandemic going around. There are a lot of people who are ill and dying, so we shouldn't be celebrating. But essentially, if you ask me to go out and spend, I also cannot go and spend. The US people also cannot go and spend. They fear for their lives. So what do they do? They hunker down at home. In the end, everybody buys things online. So what's going on? The same dollar value, right? Actually, what the US is experiencing now is uh, deflation. Prices are actually going down because businesses are going out of business. They are giving you huge discounts here in Singapore as well. If you go to, I mean, you can't go out, but if you were to place food order, you see that a lot of people are giving promotions. So essentially, I mean, before the lockdown, I saw a lot of hotels they were giving one for one or big discounts on their buffet lunch and dinner. So essentially, prices in general are going down because the businesses have to lower their prices to try to attract consumers. So then how come? So where does all this inflation go to? One place to go to is into the stock market, which are the money markets. It goes into the stock market, which means that uh, since there's a lot of spare cash, there's a lot of money floating around, it goes into the money market. The intrinsic dollar value, right, the value of the dollar is lower, which means that if you were to factor in inflation, $240 Apple stock in December is worth a lot more than $240 Apple stock in today's market. Okay, uh, the main reason why we don't see the US dollar depreciating against many currencies is because everybody around is doing the same. Okay, they are all turning on the printers and then they're just printing more of their currency to try to inflate their way out of this predicament. Um, I'm not saying that it's the wrong thing to do. In fact, this term called helicopter money, which means that the governments actually drop money into the hands of citizens to spend, is the most direct way of trying to uh, put money into the hands of consumers to ask them to go out and support the economy. Okay, but the fact of the matter is that currently this is a health issue, it's not an economic issue. And if you ask my honest opinion, I don't think that the rally will continue. I do hope that there will be a quicker resolution to this health crisis, then life can go back to somewhat more of what we are used to. It won't go back 100%, but we would expect that it would go back to somewhat what we were used to. So yeah, so I think the third reason, which is that the value of the stock, the intrinsic dollar value of the stock has lowered because of inflation, and that's the main reason why stock market prices are holding up. So if you correct it for inflation, then essentially you see that the value of the stock is a lot less. But I do think that once earnings come up, and I'm doing quite a lot of topics on uh, how we value stocks. So once earnings come out and the earnings are not fantastic, then there will be a repricing or revaluation of companies as well. So this is something that we have to take note, and we have to be careful. Okay, moving forward, I do think that asset prices have to weaken. Okay, and I'll touch on this a later date. Like, what do you mean by long term, short term, and all these other terminologies? Okay, so that's all. I hope that I've answered your question, and yeah, and stay safe, everyone, and stay home, and let's beat this COVID-19 virus. Okay, and see you guys at the next video.